Good morning, Vernon. It appears we're just
You hear
losing you a
me?
little bit. We can. It's actually you is actually just breaking a little bit, especially on the online section. But yes, I can hear you, and I have got you. And good morning to you, and good morning
What
to
about this
all of our.
morning, Toddy?
Pardon? Yes,
Mm.
everything is good about the morning. Everything is good about the morning. First thing that's good about the morning is that we're alive. That is the number one thing that's good about the morning. That's the first thing about it.
Mm.
So quickly jumping in, Vernon, as we get started in today's run into some of the news items and some of the data items. We have seen that once again our kwacha has continued on its slide downwards. So we're still losing value on the kwacha. 72-day streak of loss of value. This is quite a strong one. It's actually bigger than the last one that we had, which was actually which lasted around 45 days. When we went through the last Kwacha loss making streak, the Kwacha losses streak, we did see that the one that ran up until February ran for about 45 days, mainly due to the fact that there was at least a positive run up. Of the currency for at least there was a positive run up of the currency in that early part of 2022 or sorry, of 20 the late part of 2021 going into the early part of 2022. So we had 46 days of kwacha loss. But if you had actually put with just a few days when the kwacha had actually gained value, if you had actually just put those few days together, I think when you're going into November, going all the way into December, those few actual days, it would have also been about 80 days of kwacha loss. So we can expect this kind of movement of the currency somewhere till the middle of February, at least until the beginning part of March. Then we start to get the side to side movements of the currency because that's when we start to get back into our harvest period of our economy. So we can probably expect to be losing value in our currency, and this happens seasonally
Yeah.
because yes, it is the end of the year, and it also has to do with farmer input purchases. Whether you're looking at back even at 2020 as well, when we had that record run where the kwacha lost value all the way up until May. It lost value all the way up until the 1st of June, and it had been losing value from the previous month. From the previous year, from the beginning of August, and we keep seeing this trend. Even if you go into 2019, you do see some side to side movements with some long, prolonged movements of kwacha loss as well. So you will see this trend playing out probably until the early parts of March to the middle of February. That's when we can probably start to see. But we're also seeing the kwacha loss. The US dollar is losing a little bit of steam right now on the market. So we're closed on the interbank rate at about 18.48. While you're looking at the rand, it's also about 1.0801. So remember, the kwacha was stronger than the rand for a little bit of time, but now we're back to that point where the rand is stronger. It's up year to date 1.3%, while the US dollar is up 2.14% because of a weaker rand that actually is playing out as well in the market. Looking at the bond market, remember that tomorrow is the final closing of the bond auction that's actually playing out. 2.6 billion kwacha worth of government bonds are actually on the auction block, broken down in 2, 3, 5, 6, 2, 3, 5, 7, 10, and 15 year. So remember, the expectation is that interest rates are probably going to stay still. There isn't going to be anything pushing interest rates down, nor is there anything really pushing interest rates up. So we've hit that point of inertia where if you just go in with the last auction's bid, but I always say to people, put in a 2% margin of error just in case interest rates and yields change. But we are seeing that the secondary bond market has gone up again by 0.6%, but lost in the US dollar section by 0.11%. So offshore investors have currently lost in dollars 1.09% of their secondary bonds if they've been trading them, but holding them, you're still in a safe position. While GRZ bond index is currently up 1.02% year to date in terms of in domestic currency, but we are seeing that we have been wobbling on the exchange rate down by 0.01%, 1 basis point down. Though interest rates did rise after many days of interest rates falling, 4 consecutive days of interest rates dropping by about 0.1 basis points for that period. And finally, Vernon, if we go into the commodity space, obviously on the as we're on the midweek section, sorry, on the stock markets, before we go into 60 at 60, we have seen the stock markets folding again as by a percent as well. And of this year, we've been seeing that quite a few loss-making stocks, but it really has been a lot of take profit activity. That's the main thing that's pushing the stock market down. So a lot of people who have seen a lot of their gains from last year and they're selling off. January is a time where you see some people selling their portfolios. They need to liquidate. They've got costs they need to cover. Maybe there's some changes that are going on, institutional investors, but even individual investors tend to liquidate their stocks around this period because they've got needs, whether it's school fees, anything. People start to actually go after their portfolios a little bit to try and get some cash out of the system. But for now, Vernon, on the other side of things, we'll be going into 60 at 60, where obviously we'll get into the news. Then we're going to break into in-depth analysis into the market in terms of news and in terms of the four horsemen. But let's go on our break for the moment. Okay, sorry. Good morning, Vernon. So I think we're not able to hear you at the moment. You're still mute. All right, so we'll just kick off from now. Unfortunately, we still don't have sound on Vernon's side. So for everybody, so now getting into the market data today, let's get into our commodity market read. Now, looking at the commodity markets, we did see that copper and oil went up. Oil is back up at 86.7. Oil has really had a rally here. It's up 9.6% from last month. And this is actually affecting our expectations of the pump price. So we did start off the year saying that we'll probably see a reduction on the pump price. But now we're seeing that due to the rally in oil because of the opening up of China and the expectations that the Chinese economy will recover up from the 2.9% or the 3.9% performance it had last year to about 4.9% this year. The expectation is we're seeing about $86 on the barrel for oil, while we're also experiencing a currency that is 72 days weakening. And has been losing value since then. So as a result, we are seeing that with the US dollar And when we go back to our FX market on the last month, dollars have gotten 4.7% stronger, while oil is up 9.6%. That's putting a lot of pressure on our pump price. But remember that we do have a tax concession that's been made, especially with the changes in the tax code. So we're probably going to see neutrality in our pump price with a higher energy cost. We're probably going to see with the revision of that tax. At best, we're probably going to see 1% increase on the pump price, but we're probably going to see no movement. So 24.9 is the current price. We're probably maybe going to see it up at 24.79 at best, but zero is what I'm expecting at this point. Now, copper obviously is up also due to the optimism that's happening, but we are seeing that even that rally in copper has been short-lived due to the fact that Shanghai import premiums are falling, while we're seeing Shanghai exchange inventories for copper are starting to rise. So one of the main things that's been pushing the copper price up is the lack of inventories in London and Shanghai. But we're actually seeing that Shanghai is starting to actually push up inventories, and they are getting copper that they're holding now. But copper is still up on the year, on the month, 12%. So on year to date, it's up 10.77%. Now, on the other side of the spectrum, we did see gold start to pull back a little bit. It was down 0.48%, and in Kwacha, it was down 0.31%. Year-to-date, gold is still up 6.91. So as the hedge for geopolitical tension, we're not seeing much in terms of geopolitical tension around the world. That is actually leading people to hold gold as much, though there's still fears of a recession coming around. So let's take a look at the news, Vernon, in general, that we're seeing from yesterday. One big announcement that came domestically is that our government has actually made a deal with a company called Masdar, which is the Abu Dhabi Future Energy Company. Okay, which is part of their wing that's actually doing a lot of investing. Now, Abu Dhabi is actually going to be one of the major areas as our country is actually there where we're going to be seeing a lot of investment. They're trying to diversify out of oil. The United Arab Emirates has found itself in a situation where it wants to cleanse itself out of the oil market and change its situation. So because of that, you actually are seeing that they have actually agreed, or they did agree in principle, to an MOU and what we call a joint development agreement, which basically incites that they are looking to invest $2 billion in energy, in solar power energy in Zambia, starting with a 500 megawatt power station, which will then expand into a total amount of 2 gigawatts of power that are added to the grid. And just for everybody's view, we currently have about 3.6, somewhere between 3 and 4 gigawatts. That is going to add at least a third more to the grid. So if you're looking at 2,000 megawatt deals being done with the UK, 2,000 megawatt deals being done with the UAE, that's a combined force of about 4,000 megawatts of solar energy. Now, that's actually going to be a big thing, because here's one thing that will actually make, if this is actualized. Now, I want to brief everyone. When it comes to announcements made at presidential level, those things don't trickle down into reality for some years. Okay, we have to go through. It has to go through feasibility investment studies. Then it has to go through feasibility studies. Then it has to go through investment agreements with lawyers and all sorts of people before anyone shovels dirt and moves a solar panel into the country. It takes a bit of time before these investments actually come into light. Then it has to go through regulatory approvals. Then it has to go through environmental impact assessments. And those environmental impact assessments have to go through this body and that body to make sure that it's not greenwash. So there's a lot of people that go through these things before you even start. It's not like you saying, let me take money out of my pocket and go and buy a plot and I go and do that tomorrow. That's not how this works. So it does take a little bit of time, because I know that the problem is the energy problem is upon us. And anytime an electricity announcement is made, people instantly think that's going to happen right away. Let's brace ourselves. But it does mean, at least on the horizon, probably within the next 5 to 10 years, we are seeing about 4,000 megawatts of solar energy expected to come onto our grid. Now, even if you add the potential Batoka Gorge project, even if you add that, one of the things this is actually doing for us as a country is we will be the second largest African country with solar installation or solar installed electricity, only behind South Africa with 6,200 megawatts of solar power on its grid. So we'll be number 2 in Africa, and we'll actually be the highest in the world by percentage. In other words, what percentage are we going to be having in terms of solar energy? as a country. That's so in terms of percentage of our grid. That's what will actually change for us as a country. So that's actually quite interesting in terms of that announcement. But remember, as I said, this is an announcement. It's not. This is an investment pledge. It's an announcement. It's not exactly things being turned on yet. Remember that we started Kafue Low. I think the one that got the one that got commissioned in 2021. That project started in 2008. Okay, and we only switched on that electricity in 2021. Yes, it stalled for 4 years. So even if you take those 4 years out of the equation between 2011 and 2015, yes, it stalled for those 4 years, and then it came back, and then it came back into construction. But if you add all those years, 3 + 6, it's taken it 9 years, okay, for it to come online. So it's not easy, people. Even if you look at Copperbelt Energy Corporation, they've been working on solar installations as a company, and these things take time. It's not solar panels that's fitted into your house where you go and buy a solar system, knock it in, and then get it started. This is a full solar power plant that then has to get connected to the grid, managed. There's all sorts of people, there's skills that need to be created. So it is good for the future. In the long run, we are seeing that in terms of long-term solutions, we are cutting quite a few energy deals, which are probably going to unlock some extra electricity in our grid, diversifying our grid and helping us maintain green. And this is a direct investment through a joint venture between Mazda and ZESCO, who are going to be in a joint venture. So it's not a loan to ZESCO, because ZESCO can't take any more loans. That company is absolutely indebted. So we are seeing energy investments, which is good for the future of the country. We also were seeing announcements by the president, also with talks about trying to bring artisanal mining processing units to try and help small-scale miners from the United Arab Emirates. So we are seeing a lot of trade and investment deals being brokered every direction that we're going. Now, let's take a look further into our markets. As I said, 72 days of losing value on the kwacha with a pump price that's either heading to stay flat or going up. We did miss out a few weeks ago that we are even seeing that our PMI reading has actually gone down, is a negative for the third consecutive month, and is the lowest that it's been since February 2021. So this is actually quite bad for the outlook of the industrial sector. There's a lot of negative sentiment sitting in the industrial sector. And as well, we've also got an announcement that KCM will be shutting down the Nchanga smelter for 45 days at a cost of 27 million for upgrades. That'll obviously be trying to see if they can try and improve their outputs. KCM, remember, is still in dispute. We're waiting for the arbitration that is supposed to have started at the early part of this year to see what's going on, as we're also waiting for ZCCM to also close its deal. Remember that there has supposed to be been a circular moving around for ZCCM as to how this deal is supposed to be happening for royalties, to try and see if we can have a ZCCM that can have more money, that can actually invest in things, and also restructure itself more into a royalty financing unit than into a mining unit, into trying to be a mining investor and rather be a royalty receiver, which is a much more lucrative business and a much better way to get financing and investment into the sector. Now, finally, Vernon, let's take a look at what we're seeing on the four horsemen. One, we're seeing crude oil, just also coming up in terms of some regional news. 45% of economists are actually seeing that South Africa will be in a recession in 2023. And the Federal Reserve of America, and this is something that will probably affect a lot of the banking sectors of the world. The Federal Reserve of America wants to see climate risk analysis from the 6 biggest banks by July 2023. That's actually a big note. So you actually are going to see a lot of climate thought process coming into lending now. Banks are now being very climate conscious. You can see even with banks like Zanaco and these other ones who are going into energy, you can actually see that there's a lot of climate focus, mainly because the sources of capital that they're getting are also demanding that money goes into climate-friendly projects. So that's part of what we'll also be looking at. And finally, to kind of just wrap this all up in terms of the global outlook, what we're looking at, we're seeing that inflation risks are currently rising due to crude oil coming up due to Chinese optimism, though we are still waiting for the OPEC report. German inflation has actually come down. Italian inflation has remained flat, whilst Canadian inflation has also proceeded to come down. So we are seeing globally around the world that inflation pressure is starting to come down. So US dollar, or what I call imported inflation, is now at lower of a risk. Interest rates, we are seeing that the US dollar is getting weaker and weaker, so that is going to push interest rates down. There's less of a push for that. Even LIBOR rates around the world are starting to register a little bit of a lower position, though they're still sitting at about 5.3%. Remember, LIBOR is extremely important in what value we get our dollars at. So when you see LIBOR going up, expect the cost of dollars globally to also go up, because even for our banks to borrow from London banks, that becomes more expensive. So, and also, we're actually starting to see that there was a problem, obviously, on the New York Stock Exchange, where Goldman Sachs gave its numbers, and it had a huge miss on profits. So therefore, the equities industry was actually trending downwards due to that. In terms of economic growth, China's second lowest economic growth registered. We did see the year-end economic growth of 2.9%. This is the lowest we've ever seen from China or the second lowest we've seen from China since 1976. And we'll look into some of these questions coming up. And we've also seen that UK data is actually looking a bit better as well. With industrial data, we're actually seeing that investment funds are actually coming back into copper a little bit more. So what we're seeing is a bit of a brighter outlook on industrials, with China picking back up, but it is causing a little bit of energy inflation risk. But interest rate risks are starting to come down because of interest rates around the world. And our growth is still a bit tender, though China is expected to bounce back. And that's our outlook from the global economy. So now we have a few questions and statements that we're seeing from out here. I think one of the questions that we have here from one of our listeners here is Wix Muluba, who has asked, I think he's put out here, SEC cautions citizens on contracts, farming contracts. Securities and Exchange Commission has cautioned citizens to be careful with people and companies who are promoting supernormal profits under contract farming. And the SEC CEO, Philip Chitalu, says people at risk of losing their money if they fall for companies who are offering contracts with deals that are unrealistic. Comments on increasing in farming contracts in the country, Mr. Chitalu said. Sorry, we're gonna obviously, I think we've run out of space on that comment, and I think this is someone who was just sharing that. Now, one of the things I will point at when it comes to this whole conversation about farming contract is I always say to people, measure risk, okay? Calculate risk. And I know everyone always wants to have a comment because everyone is trying to sell. But as an investor, remember that there are three things that will steal your money. Three things steal your wealth: consumption, conservatism, and carelessness. These are three things. You need to put those into your mind as things that will basically take away your risks. And basically, and I'm giving my take on it. That is what the person had said. My take on it is, one, I think we need to stop in this country coddling people who lose money. And I understand that it's good. I like the stance that the Securities and Exchange Commission has done of cautioning people and not trying to go in there and over-regulate, of just cautioning people. And should you have your fingers burnt because you decide not to listen to a warning, well, that's your problem. People seem to have no problem with they seem to not want regulation and support when they're busy making money, but when they're losing money, all of a sudden they want the government to step in and protect them. No, protect yourself by thinking. Okay, the first thing I want people to start doing is to start thinking. Okay, use your brain first, and then we can start talking about maybe if regulation needs to come in at first, because a lot of people do not use their brain when they're trying to make money very quickly. Okay, so I've spoken about the three C's where people lose a lot of money, and often risk comes when, one, you're trying to get rich too quickly, two, you're putting money in things with lots of speculation, and three, you're not applying knowledge. So I always say, if you want to make investing easy, you want to do four things. Okay, it's what I always call easy investing. One, educate. You need to get an education in that area. I'm not saying get a degree in it, do 4 years of college in it. No, I'm saying you need to get a basic understanding of it. Take a 30-day course, do a clinic, go to webinars, get some information on things first. Okay, and also get some information on money in general first, because someone can miseducate you because you have no contextual understanding of how investment works. Okay, so get an education before you start doing this. And an education is actually quite simple to acquire. And the other thing I'll tell you is to get advice. get qualified advice. People who don't have licenses don't like this when I say this, but be very careful about getting advice from people who do not have any consequences from giving you bad advice. Because when the advice they give you blows up, they'll just look at you and say, "Why did you listen to me?" Okay. And then you're the one who will be crying. And this is why I've said people kill themselves when money goes bad, but people don't care. So I'm just telling you this right now. Qualify the advice you get. Okay. This is a reality. When it comes to money, money is a very critical issue in your life. Qualify the advice that you're getting in there. I'm not saying discredit all advice that you're getting from everyone, but I'm telling you that add a scoring to advice that you're given based on a person's licensing position. Because if they don't have a licensing position and there isn't an authority that's going to step in and tell you what they're going to be able, whether this person is qualified to give you information, and also there isn't a regulatory body who oversees this person's practices, do you know what's going to happen to you? When that person gives you bad information or they feed you incorrect things, because I don't know, maybe they're compromised and maybe they don't care. Okay. When that stuff breaks out, you will be left holding the bag and nobody will be able to help you. Okay. So grade, qualify, look for people who you can actually give you qualified advice in these areas, and sometimes pay. Okay, people don't like to hear that word because they'll say, "Oh no, it's sometimes pay." You know why? Because when you pay for things, you get valuable, and there's some things you don't want to skimp out on. I'm not saying go and pay an arm and a leg for everything. Pay something, because I'm telling you this: everything that's free sometimes is not always the best. Sometimes you got to pay for these things. So get qualified advice. So get educated, get advice, and simplify your structure. Start simple. People, stop trying to be complex and stop trying to be fancy with your investing. Start simple. When you start simple, you are able to follow something, because there are 4 levels to mastering something. You have to start by being taught. You have to start by being led. Then you have to go into trying. Then you master. And it starts with the first 10 hours, 100 hours, 1,000 hours, and 10,000 hours. You have to go through that outliers principle of enhancing yourself and being better at investing. So first get taught at investing, then follow some basic rules and do very simple investing. Start with a single asset class and get very simple, a low risk asset class, become very good at that, and then slowly get up into the categories of risk. So this is what I always tell people to get started. And then finally, if you want to do it, you need to provide the yes energy. Now, the yes energy is what drives you. What is it? What is the reason you're going to be investing? So if you want to make investing easy, get educated, get advice, get structure, find your yes energy. Those are the 4 things that you need to do. And if you want to avoid risk, follow the 4 C's. I keep telling you, people, these are guidelines. So in as much as yes, people will get their fingers burnt at all of this, let's try and make sure that we are also being adults about this. I think we are grown people, and I think we can manage to do things for ourselves. Right, Vernon. So yesterday I did say I want us to continue into the I want us to continue in the sorry, Vernon, I don't know if you have any comments on that last section. Right. So I think we'll be discussing that now. Let's go into a little bit more detail about yesterday's discussion. So yesterday we were talking about trying to get you through the early part of the financial matrix. So that's the part I just want to focus on. So today I want to talk first, before we get through that early part of the financial matrix. I really want to talk about, again, and to emphasize again, the 4 money skills and also the 3 key areas of your financial planning. Yes, they are numbers that I always know to everything. So I'm just looking at the 3 key areas. Whenever you're doing your life planning, there are 3 areas that as a person you want to try and do your life planning in. The 3 areas you want to try and do your life planning in. So just out of early part of the so yeah, the 3 areas you want to try and do your life planning in. One, sorry, I think we're getting a bit of feedback there, guys. The 3 areas you want to do your life planning in are 1, faith, focus, and finance. These are the 3 areas as a person that I call these your primary areas. Remember, I've got the 6 F's that I want you to always follow: faith, focus, finance, fitness, family, flourish. Now, I've broken these into two categories for all of us to try and follow. The first area is. Sorry, guys, we really are getting quite a bit of feedback here. The first area that I want us to try and focus on is what we call your primary areas, and your primary areas of this are faith, focus, and finance. The reason I talk about this is these are your areas, the things you believe in, the things you do, and the things you have are where you are going to make progress. Okay, where you're going to make quite a lot of progress and a lot of tangible impact in your life. Okay, so that's the first focus that we want to try and follow. That's the first progress that I want as many of us to try and follow. So making goals and setting habits in those areas of your life is actually quite critical and important. Okay, so I want as many of us, as I said, to pay attention to those three areas first. I'm not saying the others don't matter. I just want us to categorize them. So these are areas of your life where you're going to make tangible progress and where you're going to make impact. It's also the areas where your life, your lineage, your legacy, your legacy, your legend, and your lineage are going to be built. So that's a key part that you want to pay attention to. So set yourself in your faith, which is your belief systems, your religious practices, and your spiritual journey. So look at that, because that affects the way you see the world. That affects the things you want to leave behind. Your energy is really driven by your faith and your belief system. And also your decision making is guided by what you truly believe in. I'm not talking about the faith that you say you are to people. I'm talking about the faith that you practice when the door is closed, when there's nobody there. What do you do in your life of faith? What do you believe in? What is it that guides your mind? That's where you want to make progress. You also want to make progress in your focus life. People, for you to be able to have money to do, you have to make it. You have to do something. You have to run a business. You have to do a gig. You have to do something in society, and also to make a contribution that lasts, that also affects your legacy. So your legend, your legacy, and your lineage are also built in your area of focus. Okay, so look at the goals that you got there, and every goal must have a habit. Now remember, every goal must be smart in that it must be simple, measurable, actionable meaning it has to have a habit or a repeated action, relevant meaning that it has to be connected to your legacy, your legend, legacy or lineage, and also time bound. There has to be a date you want to set to it, and then also attach a habit to it. What is the thing that you're going to be doing every day, week, or month to make sure that this thing makes progress, and then you're able to assess the progress. Then also so your areas of focus are your gigs, your profession, your purpose, your career, and your business. That's your areas of focus that you'd like to try and put into your mind. And then the other part you have to look at also is your area of finance. So that's also where your goals are being set. So your primary areas, your areas of finance. Now, in your area of finance, a lot of you are trying to figure out what goals should I set. An easy way to help you. Now, one of the reasons I give you all these tricks and tools and tips and guidelines is because a lot of people are lost in these areas. There's a lot of debate saying, well, there isn't a one way to do all this stuff and people should figure out their way. Let me be honest with you, 90% of people are lost. Okay, 90% of people are lost. When you are lost, if you haven't figured out how to get somewhere, first start by using a map. Okay, I'm just being honest with you. The first thing you want to do in life is you want to just follow a map. Right? Once you get comfortable with the surroundings and you kind of figure out where something is, then you can start using your own methods and then trick shooting your way somewhere. It's like going to a destination, going to a friend's house for the first time. The first time you ask them, dude, can you send me a Google ping so that I can actually see how to get there and I can maybe follow Google Maps to get there. Then when I'm comfortable following Google Maps and I know where I'm around, then I can figure out my way to get there. I'm more comfortable with using different routes, or maybe a route that's more suitable to me, or maybe using a method that's more suitable to me. But the first 3-4 times you go to that friend's house, you're using a map. Okay, that's the reality. Unless you're familiar with that area. When it comes to finance, many people are just not familiar with how to manage their money. They are not taught how to do it at school. It's financially illiteracy there's financial illiteracy at their houses. Nobody spoke about money when they were growing up. That is just a reality. Okay, so because people are lost, them tips, we give them tools, we give them basic things that they can follow. So there are 4 money areas that you want to set your goals in. This is for people who are just lost. Okay, you haven't gotten started, you're looking for it. How do I set money goals? Here are 4. Dave Ramsey gives you the 7 baby steps. Those are simple to follow. He says put a basic amount of money in the bank, pay off your debt, get 3 to 6 months of savings. Then you start building you can start building your retirement. Then you start building your children's college, and then eventually you can now start becoming generous in life. He gives you 7 stages to follow. Many people have used that and they've become what he calls baby steps millionaires. People who have actually built wealth doing that. Okay, that's the journey to wealth. Now, people have tried to debate him. They're like arguing with him. No, I prefer this. I prefer that. The reality is he has the results to show for it, because what we have found in life is giving people simplified maps to follow. Giving people instructions to follow kind of helps people do stuff. Okay? Giving people basic instructions that they can follow kind of helps them do stuff. So, yes, are we oversimplifying some of this financial advice? Yes. But are people financially literate when it comes to investing? Majority, yes. Because unfortunately, in this world, we measure financial literacy by the ability to open a bank account, not by the ability to build wealth. So I like to say we may be financially literate, but we are unfortunately wealth illiterate. Okay? We are still majority wealth illiterate. How do I know this? Because when you start looking at wealth products like insurance, they'll tell you that the financial inclusion when it comes to things like banks and mobile money, those are high. 50-60% of the country are using those things, money transfer. When it comes to wealth products, pension funds, investment products, and insurance products, less than 1% of the country is using that. We are majority wealth illiterate. Okay, we're wealth non included, and we're majority wealth illiterate. That is a reality. So let's put all this together for ourselves so that we can actually look at this. And I'm going to tell you the 4 areas where you have to make your goals when it comes to your money every single year. Area number 1, remember I said there are 4 M's, the 4 money skills. 1 is making money. What are your goals for making money? How are you going to do it? That's the habits that you need to apply. But what is the income that you want to make? And you always have to say, start where you are, use what you've got, do what you can. Don't make goals based on things that are not even around. Start exactly where you are. Milton, welcome to you. Start exactly where you are when it comes to goal setting. And Doreen, welcome to you and good morning. So, where are you with money making? And maybe start looking at where you can get to. And Priscilla, good morning to you. We're just saying good morning to everyone who just jumps in and pops in. So, look at your making money goals. Okay, so how much do you want to make by the end of this year? And therefore, now implement strategies around it and also look at the risks that actually are against you. So, what do you need to implement? What skills do you need to gather? What do you need to do? How does a person make money? We've talked about this, and we're going to go through some of these money skills each when it comes to next week. I want to really travel through these 4 money skills in general. You also have to look at goals of managing your money. Managing your money is budgeting and saving. Okay. So you also want to look at where to reduce your expenditures. You've made money. Should I increase my making money? Should I reduce my expenditures because I need a margin and an excess that I can invest? And once you've created an excess point, in other words, I make more money than I spend, what am I doing with this excess? I am multiplying money. What is your third area? You want to look at multiplication goals. Multiplying money is your investments. What are you doing with your investments? How much do you want to have invested by this year? How much do you want your investments to grow by this year? What is your target for interest? What are you doing? Where are you placing it? Those are some goals you want to have. And then finally, maintaining money. You look at your structures. Do you have a will if anything happens to your money, or does it just evaporate into the air if you die? Do you have a transfer mechanism? Do you have an estate? Are you managing your taxes? Are you managing the risks on your investment? This is what we call protecting and maintaining money. So the 4 areas you want to try and look at. Now, you have to look at them in that order because you can't manage money you haven't made. You actually have to make money. Make it first. Okay? Before you start trying to become investor literate and such a whiz kid in investment, make money first. Like actually figure out how to make it. Okay, what skill can you sell? What thing can you sell? What can you do? Remember, to make money, you have to sell, serve, and solve. So, what areas are you very good at selling, serving, and solving in that people need that you can go out there and make a living doing? Once you can make money doing something, then you can transition to managing money, which is budgeting, expense management, saving. Okay, once you've worked out these things, and then once you've managed your budgeting, like you're doing budgeting regularly, then you go to multiplying, which is investing. Okay, that's where you're now investing and putting money to your high five investment goals, and you're allocating. So you're really investing, allocating, and managing your investment goals. And then you're going to maintaining money, saying, what structures am I putting this in? What tax management am I applying? These are some areas you want to look at. And those are your primary areas of goal setting. Now, if you're also going to do what I call support areas. Now, support areas, these are the areas of your goal setting that make your primary areas, which is your faith, focus, and finance. Those three areas, these three things I'm going to talk about are the areas of goal setting that make those parts sustainable. So you can't sustain your impact or your progress that you're trying to make in your work, or the impact and progress you're trying to make with your money, and the impact and progress you're trying to make with your faith. You can't do that if your health is in disarray. Okay, so food and fitness, this is where you want to have goals, because everything sits on your food and fitness. So everything sits on your body being in good shape. So you need to have your body in good shape. So food and fitness, that's your goal number one. Physical health and nutrition. What are the goals that are there to support those three areas? Friends and family, what are your goals in those areas to support? Because relationships are good. They're good for the soul. They're good for happiness. Now, you may have, this is a bit of a difficult area because you're dealing with other people, and it's hard to control other people. And truth be told, you don't want to control other people. It's not good for you. Okay, it's a lot of stress. So these are just areas where you maybe want to just maybe take a bit of initiative, put yourself out there, do a few things. That's life. Now, the other area which you have more control over is called flourish. This is your emotional, mental, and personal development. What books are you reading? Skills are you enhancing? This will support your finance area. It will support your flourish. It'll support your finance, your focus, and it'll support your faith. So these are key. This is how you do your life planning, your annual planning. So remember, I've given out a tool. I've actually given out a free tool to people, and I'm going to try and share it here on what it looks like in Word. But I actually have given out a free tool on my page to anybody who wants to look at it for life planning. And you just want to have a look at it in terms of what you want to do for just life planning for yourself. This is the six F's goals that I have set here. And it's just a very simple tool. If you go to my page, you'll be able to even just download it for yourself. And I've allowed anyone to do it. And these are simple instructions in each area. Set 5 goals. Attach daily, weekly, or monthly corresponding habits, and you'll be able to execute them. And if you look at this, make each goal smart. And I've just given you here your primary areas, like I talked about. And here are your support areas. This is just called a one-page plan for you to be able to look at your life for the year. One page, okay? Do not make this complicated. Make things simple when you're trying to set yourself up. Do not make life complicated for yourself. So this is just a planning tool, but really it is something I have to try and do for people to be able to understand that if you want, and the reason why we look at those areas of life, if you want to be able to to do well or to enjoy your money, you have to work on the different areas of life. All right, so that was point number one that I was trying to make in terms of the area. So I've talked about the 4 money skills, and I also talked about your primary versus your secondary areas of planning. Now, finally, in these last 6 minutes, I want to go through the secondary part I was looking at yesterday. Yesterday, I was introducing the financial planning matrix. And I want to go through what this looks like for your journey. So please give me a writing signal or a note-taking signal if you're here, so that I know that you are taking notes. If you're somewhere, please take out a pen and a paper, because remember, Ebbinghaus actually gives us that a person who doesn't take notes at something in 48 hours will lose their memory of it. So if we go through the financial planning matrix, the financial planning matrix basically states that there are 4 areas of your life, which is cash, risk, debt, and tax and planning. Okay, cash risk, debt, tax planning, and estate. And we said that your theme in year one of your life is save, start, and survive. So 20 to 29, which is phase one, save, start, and survive. Figure out how to make money. Okay, in your first 21, your first in 20 to 29, your job is to figure out how to make money. How are you going to make it? Okay, and then spend it properly. Live within 75% of it. Program yourself to target living within 75% of what you make. In other words, spend 75% of what you make. Stick to your basic four walls. Track your budget. Track yourself using a budget. You will win at this game if you're 20 to 29 and you start budgeting. Written budgeting in Excel or on paper, but written budgeting. 10 minutes of updating your budget every single day. That will actually be a very strong discipline. Avoid lavish spending, inexpensive debt-free memories, and save first and spend next. That's the game that you want to play. Now, are you going to adhere to that every single month? No. January is already going to obliterate the majority of us. That's life. I mean, it's already caught some of us at the ankles in some areas, but you want to try and make sure that you don't do this too often. Okay? In my 20s, I messed this part up too. But later on, I started to realize where the mistakes were. But if you do it in your 20s, I promise you that your 30s and 40s are really going to respect you. The second part you want to cover is risks. Get yourself on basic health insurance, not fancy health insurance, basic health insurance. Maybe try living healthy as well. Maybe try eating healthy and living healthy. A lot of people in their 20s become very arrogant about their health. But if you take your health also, by the way, if you take your health seriously in your 20s, you're probably going to have a good life in your 40s and 50s. A lot of us didn't take our health well in our 20s. We did in our teens, but in our 20s, we threw that away. And guys my age are starting to I'm 35. Guys my age are starting to have some serious health issues. Okay, I'm talking about my age mates, 30 to 40, 45. They're already starting to manifest some serious health issues. And we can all go back to our 20s and we know what we were doing that wasn't helping. So maybe get some basic health insurance and try and take seriously your health. Functional property insurance, you really want to get basic insurance. Insure your phone, insure your computer, insure the things that you own. What are the basic little things that you own? Because you don't own much in your 20 to 29 phase, but insure it. Okay, if your phone goes out, you're gonna have issues. If someone steals your phone, you're gonna have issues. And put about 2 to 5,000 kwacha of cash in the bank for an emergency and store that there. Emergencies are unexpected, unplanned, and unavoidable things. So unexpected, unplanned, unavoidable things. That's what you're looking at. And then start building the 3 to 6 months emergency reserve. Once you have that, you've protected yourself from any slight thing happening. And remember, look out for, in your debt management, look out for student debt, consumer credit, car loans, wedding debt, and business debt. Do simple planning for taxes. And also, finally, get into some basic estate management. You have a few assets. Now let's talk about the years 30 to 39. What does that look like? When you're 30 to 39, you've got discretionary cash flow. You're making a bit more money. If you've been at this game for some time, when you get to 30 to 39, you're no longer just trying to make 2 grand, 3 grand. Now you're talking about trying to make 10, 20. That's where your numbers are now looking at. So you've got a bit more discretionary cash flow in that you're making above the needs basket. But you've got to watch out for lifestyle inflation. Okay, what usually happens is when you're 30, you feel this need to show people that you're in your 30 by spending like a 30-year-old person, because you have to show bigger things. You have to do bigger things. Your car has to be bigger. Your vacations have to be bigger. Your dinners have to be bigger. The parties, things have to be more expensive. The class of stuff you consume has to be bigger because you have to show that you're older. That's a mistake a lot of people make because their portfolios are not growing at the same rate their spending is. So your portfolio must exhibit the growth faster than your spending is. And avoid bad big ticket purchase items, car loans and mortgages. These are the places where there are a lot of traps that happen to people in their 30s. Now you have to start getting life insurance at this point because you've probably got some people who rely on you at this point. So look at your risk in terms of life and disability insurance. Personally, try and see what life insurance you can acquire. Your 3 to 6 months emergency fund is non-negotiable at this time. By the time you get to 30 to 39, when somebody asks you, do you have 25 to 50 grand available? That should be something that we should be talking about when emergencies come along. Though a lot of us, like I said, this stuff does get meshed up. So if you want to try and catch up on this, here's my advice to you. Maybe do the 52-week money challenge to rebuild your emergency fund. A lot of us have had to tap into emergency funds, and we have to rebuild them. So take about a year to rebuild your emergency fund and throw as much as you can to try and get back there within 6 to 12 months. Rebuild your emergency fund, put things on hold, rebuild that emergency fund, and then get back to full investing. And try and see if you can get all risk insurance, because by this time you've probably got furniture, you probably got a car, you probably got all sorts of things. So that's some things we really want to try and get to. At this point, the debts you want to avoid in your 30 to 39 area is consumer credit, car loans. That's a big one. Please, people, there's a car purchasing formula that I have published a long time ago. Revisit that, which looks at your wealth level and looks at your income level. But in effect, your car should not be more than 3 to 6 months of your monthly income, and you must assess it also against your wealth. Do you have the wealth for this car loan? Do you have the income for this car? So please assess that whether you should be buying the car that you're buying, because one of the biggest reasons people have very painful car loans is because they're buying expensive cars. That's the first step. They're buying cars that they want to maybe show people, but that happens. Home loans also stick in. 30 to 39, one of the biggest expenses people suffer with is also schools. The types of schools we start rushing our kids into, that also affects our pockets as well. So there's a lot of schools that are extremely expensive. So we got to kind of manage this kind of thing out. Okay, I know you want to get your child a good education, but can you afford it? Want what you want, but buy what you can afford. Wedding debt also. People who get married into their 30s feel like they have to have weddings that are 100,000 kwacha or more. You have to be very careful about this because everyone has to now get to hotels. We have to get to these things. The people who get married in Civic Center are no less married than you. I'm being honest with you. Okay, so there's a spectrum of things that you really have to start looking at. And business debt is one of the biggest ones. People take on a lot of people who have got jobs in their 30s to 39, try and go into businesses, and they really take huge gambles that really wreck their lives heavily. So you want to try and avoid this, or you want to try and manage this very carefully. Now, I want you to also look at your tax rate, especially on investment vehicles. And at this point, you may have gotten a little bit of scale, so seek a bit of tax advice. And in your 30 to 39, you need a will. Okay, by this point, you should have a will. Okay, so look at writing a will. By the end of this year, have a will. Okay, if you're 30 to 39 and you don't have a will, have a will. All right, or if you're above 30, have a will. Update your beneficiaries every single year. Every year you want to go through beneficiary updates. So you just want to make sure you go through something in computer science we used to call CRUD: create, update, create, review, update, delete. So C, do you have to create new beneficiaries, update, review, or delete? So that's what we call CRUD. And talk to people who want to be executors of your estate. So if you've got children, have you spoken to the godparents? Have you spoken to the people who are going to be managing these things? Have you gotten somebody who's going to have financial power of attorney over the accounts? Because in Zambia, when someone dies, a bunch of people you've never seen from the villages just flock and start going through all your papers and start ripping through, getting money from everywhere. And they don't care if you have kids, people. They don't care if you've got kids. They're there to get yours, man. People pick you for flesh in this country when you die. Okay, that's the reality I've seen a lot. So this is just some data that we want to try and pull through on where you should be. Now, remember, the purpose of this is assess yourself by the financial matrix. Where am I? Where should I be? And from there, you're able to now start to see what are the things that are missing currently. I need to fix those. And then where am I going to be in my 40s? So if you're in your 30s, start looking at your 40s as your inter-year goal, where you need to get to. So look at what you need to do for 40 to 49, and we'll go through that. We'll go through that on Friday, 40 to 49 and 50 onwards, what people should be looking at. That has been me rounding up a lot of your financial situation for today. The financial matrix is something I'd like you to follow. It's a series that we'll be going through, and we'll be going through a lot more of the planning matrix. So to everybody who's there, thank you. God bless. See you all the next day.